Today, we're going to focus on some of the important points of the new federal relief bill and portions that apply specifically to minority small businesses. Please note that the bill was just signed by the President on December 27th. Now that the bill is signed, the various agencies involved need time to write their own guidelines and procedures. Details of implementation, including when some of these programs are going to open, are going to be based on the timelines of those agencies. For programs administered by the SBA will release guidelines within 10 days of the bill being signed, which will include information on when the SBA portals will be able to will be open to processing applications. In addition, when it comes to programs like PPP and debt relief, lenders will need time to review the information and integrate new applications into their systems. So we're going to all have to stay tuned. We'll continue to update you with the latest information available. There is going to be time at the end of the webinar to answer questions, and we'll do our best based on the information that we have at this time. Please use the question and answer box at the bottom for your questions. We'll answer these questions live, not in the chat. Can you go to the next slide, Lisa? So I want to start by issuing a big thank you to all of our partners today that are helping us to reach out to everyone that could benefit from learning more about these most recent PPP updates and other federal relief elements. So I want to thank the Black Business Alliance, BPT, OIC, HEDCO, and the Southern Connecticut Black Chamber of Commerce. And we're very happy to have Deborah Cavanis, the President and CEO from the Greater Bridgepoint Opportunities Industrialization Center with us, Kim Hawkins, the Vice President and COO of HEDCO, Anne-Marie Knight, the Director of the Black Business Alliance, and Diana Washington, the Vice President of the Southern Connecticut Black Chamber of Commerce. And all of these organizations are here and available to help you with your applications and questions and access to these programs, as well as the Connecticut Small Business Development Center and our advisors. So thank you very much, all of you, for being here today. So Joe, I will turn it over to you now.
Thanks, Matt. Good morning, everyone. Unemployment update. Since the Act, overall unemployment assistance has been extended from 39 weeks to 50 weeks, which takes it through to March 14th of 2021. Additional benefits that's been included in the Act is a $300 per week through March 14, 2021, which would be processed in the same similar way that it was done before under the $600 per week is done. And the Connecticut Department of Labor will be sending out further information regarding how they will be dispersing the $300 in additional links. So for those individuals that are on unemployment, know that they will be receiving an additional $300 post hence to March 14th, which gives them additional 50 weeks in total. Also, the extension of the pandemic unemployment assistance, the PUA, which makes self-employment individuals and independent contractors are eligible for unemployment. Among others, there's also the Families First Coronavirus Response Act to be included that as well, which is dealing with leave benefits related to sick or family members' leave tied to the pandemic, which is also part of this act. That is going to be extended to all the way to March 14th. Once again, the U.S. Department of Labor will be issuing guidelines for this, and please feel free to reach out to them at the present time. The Connecticut Department of Labor will work to update their system and release information regarding this when applications and open enrollment for extended assistance will be made available. Next slide, please. Taxation update up until this point, that has been extended. The deferral of payroll taxes, overall unemployment assistance, the taxation, that has been extended as well. This is one thing that the Act did provide for, and we're very grateful that has happened. I know a number of clients have been talking about that. A number of the partners have been talking about that, about the taxation and what does that really mean for small businesses, especially in the minority community. So pretty much the way the Act is written, the PPP loan forgiveness for qualifying businesses does not need to be included in the gross income. A big concern of many asking the PPP funds that have been received or will be received under the new bill, will it be treated as exempt income, especially in partnerships and S corporations? So that the answer is yes. There is an exclusion. There's no exclusion of the deductions for allowable expenses covered with the PPP funds, which many people are asking that as well. So know that the deductions and allowable expenses are covered with the PPP loans and funds. Under the EIDL, advances would receive the same treatment. There's no difference in that. The IRS will be releasing further details and will update our resource center as well on the information provided in upcoming webinars. So please stay tuned for that. We will have further information as it comes available through the IRS regarding that. Next slide, please. SBA renewed COVID-19 assistance. As before in the CARES Act, the new bill, we still have the Paycheck Protection Program that is available. The EIDL loan advance, which we'll talk about a little bit about later, and some of the newer language in that. The $10,000 is still available for that. We'll talk a little bit about the differences in who can qualify and how you qualify for that. And then there's also the standard SBA debt relief that is also being provided as well. So we're going to talk a little bit about that as well. So please note that the bill has not even been signed into law. It's just went into effect as of yesterday. So we know that there's 10 days that SBA has to implement. So we will give you further information as it is made available to us. Next slide, please. Now, Michelle is going to take you through, my colleague, through the Paycheck Protection Program and the specifics under the new bill. Michelle.
Thank you, Joe. Good morning, everybody. So there is updated eligibility for the Paycheck Protection Program. This includes small businesses, self-employed individuals, sole proprietors, independent contractors, or small agricultural cooperatives with 300 employees or less, which is down from 500 employees or less from previous program. There's expanded eligibility for some 501c6 organizations with 300 employees or less, as long as they don't receive more than 15% of revenue from lobbying activities. Also, local newspapers, TV, and radio stations previously ineligible due to affiliation rules with other stations are now eligible. Businesses must demonstrate at least a 25% reduction in gross revenues between comparable quarters in 2019 and 2020. And we'll get into the details of that in just a moment. Also, businesses that are not in operation on February 15th, 2020 are not eligible for the new Paycheck Protection Program. So listed below are several scenarios for businesses to follow in order to demonstrate the 25% reduction in any one quarter. Businesses that were operating for the whole of 2019, you're going to look at your gross receipts for the first quarter through the fourth quarter, Q1 through Q4 of 2020, and you must show a 25% plus decline when compared to the same quarter in 2019. Businesses that were not operating in Q1 and Q2 of 2019, but operating in Q3 and Q4, you will compare the Q3 and Q4 of 2020 to the Q3 and Q4 of 2019 to show the 25% plus decline. Businesses operating only during Q4 of 2019, you're going to compare those gross revenues to that of Q4 of 2020. And then businesses that were not in business during 2019, but were in operation on February 15th, 2020, you're going to compare your Q2 through Q4 to your first quarter of 2020. Next slide, please. Part of this expanded Paycheck Protection Program includes set-asides to ensure that smaller borrowers and underserved communities get the help they need, such as small businesses with 10 or fewer employees and loans under $250K in low-income communities, shuttered venues with 50 employees or less. Further details on this will be covered in a separate slide. There are also set-asides of $30 billion for loans made by small community lenders, including community development financial institutions, credit unions, small community banks, minority depository institutions, and farm service lenders. Next slide, please. So I'm going to quickly review the loan basics of the Paycheck Protection Program. The maximum loan amount has been revised to $2 million, and the interest rate remains at 1%, and there does not seem to be a change stated in the repayment terms at the moment, unless SBA revises this in the implementation. This means that those businesses who applied for a loan prior to June 5th of 2020 retain the 2-year repayment timelines that they negotiated, that they can negotiate extending with their lender to 5 years. And those businesses who applied for the Paycheck Protection Program after June 5th automatically get the 5-year repayment timeline. As you may know, no collateral or personal guarantee was required since the beginning of the program, and this does not seem to have changed. We will release a detailed list of what follows under the revised allowable expenses based on the law, but keep in mind implementation and additional details may have to wait until the SBA is able to issue its guidance documents. Some of the allowable uses of the Paycheck Protection Program have been updated and expanded. This includes qualifying payroll expense, including some health and leave benefits, payments on mortgage interest, but not principal, rent and utilities, and covered operations expenditures, property damage costs, supplier costs, and covered worker protection expenditures. These loans are not intended to replace lost sales, however. In order to qualify for loan forgiveness, at least 60% of the loan must be used on payroll. The new deadline to apply for PPP funds is now March 31st, 2020. But again, keep in mind we'll have to wait for the Small Business Administration to be able to release guidance and reopen their portals, and then allow time for lenders to process the loans and implement. Next slide. Thank you. In order to calculate the amount that you may qualify for, you need to take the sum of the qualified payroll costs and minus the sum of the excluded payroll costs to determine the payroll costs. This calculation is different for non-seasonal employers versus seasonal employers. For non-seasonal employers, this is calculated at 2.5 times the average monthly payroll cost up to $2 million, either 1 year period before the loan is made or calendar year 2019. Important, any small business with a NAICS code of 72, which includes businesses that provide accommodations and food services, you can request 3.5 times the average monthly payroll. For seasonal employers, to calculate the payroll cost, you will take 2.5 times the average monthly payroll cost up to $2 million for a 12-week period between February 19th, 2019 and February 15th, 2020. And we will have more resources on how you do this calculation on our website at ctsbdc.com, COVID-19 Recovery Resources. Next slide, please. So we do encourage business owners to start getting your documents together. Based on what was asked of businesses during the first round and the additional potential requirement of demonstrating revenue decrease, there are some documents we suggest you start gathering in order to be prepared for the next round. This includes your 2019 tax returns or 2019 year-end financial statements, your 2020 tax returns, estimated Schedule C, K, or 2020 year-end financial statements, your last 4 quarters of payroll forms, the 941s, a verification of the number of employees and payroll incurred over the most recent 12-month period, identifying employees in excess of $100,000, and Forms 1099 miscellaneous for self-employed individuals. Part of the Paycheck Protection Program includes applying for forgiveness, and this outlines some of the forgiveness and forgiveness enhancements. We just want to remind you that the 60-40 rule remains. At least 60% of the Paycheck Protection Program funds must be used for allowable payroll costs. There are additional allowable expenses covered by this bill, which we explained briefly in the introduction. The covered period allows borrowers to select their loan forgiveness covered period starting on the day of the disbursement of funds into the bank account and choosing a time period between 8 and 24 weeks. There will be a simplified forgiveness process for loans under $150K. This process is to be determined. It also increases the SBA's ability to review and audit forgiven loans of all sizes. The process requires certifications to be made as well as a written description to include number of employees retained because of the PPP loan. And the last piece is the EIDL advances. These no longer have to be subtracted from PPP forgiveness. And now I will turn it back over to Joe to walk through the EIDL advance.
Sorry, guys. The eligible businesses in low-income communities that did not get the EIDL loan/advance grant because funds had run out can now qualify for the $10,000. Businesses in low-income communities that received an EIDL loan in advance can get a grant equal to the difference of what they received and the $10,000. For example, if you received $1,000, which many small businesses did receive, they are now eligible to get up to the $10,000 amount, but they just need to apply. Eligibility updated to the small business with 300 or less employees must demonstrate gross receipts less than 30% during an 8-week period between March 2nd, 2020 and December 31st, 2021, relative to a comparable 8-week period immediately preceding March 2nd, 2020, or during 2019. The SBA will release specific guidelines as it relates to seasonal businesses. Again, no date yet as to when the portal will open, again, for the advance, so please stay tuned for that. The debt relief. There you go. The new extends the Small Business Debt Relief Program, Section 1112 of the CARES Act, which would defer payments of principal and interest on new and existing all SBA 7A, 504, or microloan programs for eligible entities. Next slide, please. Grant for shorter venues. Live venue operations or promoters, theatrical producers, live performing arts organizations, operators, museum operators, motion picture theater operators, or talent representatives who demonstrate at least a 25% reduction in revenues. This they would qualify. These are specific requirements for different types of venues, and we encourage you to reach out for further details as they are extensive and apply to a smaller portion of our audience. $2 billion is set aside for those with 50 full-time employees or fewer, but set aside only for 60 days. Allocation of funds is an initial 14-day period. Grants will be awarded to eligible entities that have faced 90% or greater revenue loss. This may include large chains, such as cinemas. In the 14-day period following the initial 14-day period, grants will be awarded to eligible entities that have faced 70% or greater revenue loss. After these two periods, grants shall be awarded to all other eligible entities. Continuing on, the grants to be used for specific expenses such as a payroll cost, rent, utilities, and personal protection equipment. Initial grant can be up to $10 million, and a second grant could be up to 50% of the first grant. Next slide, please. How can you get help to small businesses? As mentioned initially, Connecticut Small Business Development Center works with small businesses to provide no-cost confidential advising, utilizing our team of advisors and networks throughout the state. We work closely with our resource partners, including local economic development officers and chambers of commerce, to support our clients. We work with businesses in all industries at the start, growth, or exit stage, and pair our expert advisors like myself and Michelle with a unique set of powerful tools that include marketing research, financial analysis, in-depth projections, and decision-making frameworks. We have developed and continue to update our Coronavirus Business Resource Center on our website at ctspdc.com with the latest information on federal, state, and other resources available during this time. On this page, our resources for state and federal guidelines, additional potential funding opportunities, and posters and infographics for you to reference, point, and share for various topics. Feel free to reach out for our assistance to discuss options for any small business, from pivoting to connecting better with customers, accessing the capital, or working through these applications. Feel free to reach out to us at ctspdc.com. And lastly, this is our information I just described to you at ctspdc.com, or you can follow us on Facebook and Twitter or Instagram at ctspdc. Thank you. On to live question answers. We'll now begin. Matt, are you taking over for the live question answer break?
Yep. Thank you very much, Joe. I'll start. We have questions coming in, and so in this slide also we have a live Q&A help desk that is available. So if you don't get your question answered here today, and you're just have one or two questions, we have a help desk schedule on our website that allows you to go in at a set period of time and just get that question answered quickly. So as we start to go through the questions, Catherine, I think that the first one will probably speak to you. We have somebody that received $1,000 in an EIDL grant and an EIDL loan. They are understanding that they might be able to receive another $9,000 in the EIDL grant. How would they let the SBA know that they would like to receive that additional money?
And thank you, Matt, and thank you for that question. And many of my answers, unfortunately, are going to say that we have to wait for so much guidance and implementation. So I'm very thankful for SBDC for hosting this event, but unfortunately, those kind of details I just do not have. And if I were to give an answer, it surely would change over the next 9 days. So thank you for that question. Make sure that you have, SBDC's information, and then you can always contact the Connecticut SBA office. But again, until we get specific guidelines and implementation, those are the kind of questions I just don't have detail for.
Great. Thank you, Catherine. Yeah, and as we said, there's a lot of program parameters that are still being determined. So we'll do our best to provide the perspective right now. So a similar question is, we were granted forgiveness on the PPP except for the $1,000 of the EIDL advance. Is it possible that this will change and we will be forgiven?
Right. So that one's coming at me, and I think whoever asked that question, I'm sure that there's another 25 people on this webinar that also have that same question. And I have the bill in front of me, but until we get the guidance, I don't know. So my answer to that questionnaire would be stay with us, stick with us. And as soon as we get the information, we'll try to get it to him or her in the clean possible so that they can deal with that, $1,000 advance issue.
Great. Thank you very much, Catherine. So let's see, for the next piece this is talking about the PPP and the 25% reduction or demonstrated reduction. Michelle, you were talking about this area. So for the 25% reduction, can the business choose between cash and accrual in terms of how they're demonstrating that?
We have not received specific guidelines on whether it's cash or accrual. We just know that it is the gross revenues.
Great, thank you. And for all of the people that are wondering if this webinar will be available on demand, yes, it is being recorded and it will be on the on-demand section of our website so that you can review at a later time. So going through here, can we speak a bit more in depth about the opportunities for minority-owned businesses? I think one of the pieces that needs to still be clarified is that there has not been a definition yet that we've seen in terms of the low-income communities that some of the funding programs are targeted to, so we need to wait for that definition. But Joe or Catherine, do you want to speak a little bit more about what programs specifically are targeted towards the minority?
Well, specifically under the new bill, there's actually a set-aside, which was not in the previous CARES Act. So there's one for $15 billion, there's another for $30 billion to micro lenders, and there's I think another 15 or 10 billion. Within that, it would be toward minority or small business in low-income communities. And so, you got to look at the definition of low-income communities in our country. And in the state of Connecticut, we have 18 actual low-income or urban centers here in the state of Connecticut. So with the culmination of what presently is out there, if you look at the announcements of last week or in the last few weeks, with the city of Hartford now allocating another additional $800,000 of dollars for those businesses in the Hartford area. Look at New Haven's program through the New Haven Foundation, and HEDCO is working on that. And with the city, their $1.5 million through their $25,000 program. And if you look at the city of Bridgeport, I know Deborah Cavanis was on the phone, and they talk about their $25,000 grant program that is associated with that. So I would encourage any small business on the sound of my voice and those that work with small business to, one, look at some of the local resources as further guidance comes from the SBA. Hopefully we'll have that after the first of the year, that we'll be able to tell you more specifically how that monies will be allocated and to what areas. So just be patient with that. And remember, the bill just was signed on Sunday by the president. We're Tuesday. They have 10 days to get the guidelines to the SBA. And I know they're working diligently on that with the administrator. So as we get that information, we will upload that to our website. So just frequently come to our website or go to SBA's website. So that information and guidance will be listed there.
And I would just, oh yeah, please, Catherine.
Thank you, Joe, for that. And I think it's really important. Part of the benefits of this webinar is to talk to Joe's points that now there are specific set-asides. So this is sort of a point to get ourselves ready, make those connections, make those outreaches. So as soon as we do have that guidance, we can get up and running. And, I think it was Michelle that went through a slide of, what documentation do businesses need to get ready for this? I think those are things that, while we can't give specifics, and real specific and guidances, getting our businesses to get all that financial data together is something that we can do now while we're waiting for the implementation.
That's a great point, Catherine. That's exactly what people need to be doing right now. And, with these set-asides as well, it's another opportunity to make sure you're communicating with people in your community. All of the partners that came together to provide this webinar today, the SBA, the Black Business Alliance, Greater Bridgeport Opportunities Industrialization Center, HEDCO, the Southern Connecticut Black Chamber of Commerce, we're all here to try to make sure that our minority business owners understand what set-asides there are and help get your applications put together to access the funds. So, Lisa, if you could go back to slide 3, we have a couple of questions on unemployment. It might just be helpful having some of that information back up on the screen while we go through this. Let me go back to where that question is. Sorry. In Connecticut, our employment percentage was too low the past few weeks, so my PUA ended. Will this affect PUA benefits for the new additional $300 a week? Will Connecticut PUA recipients have PUA available to them again in Connecticut? Joe or Michelle?
That answer is yes. It's going to be extended to March 14th. So there is an extension to the PUA, as well as there's an extension to the FFCRA as well. That date, along with the $300 additional payment, the new drop dead date is now March 14th. So it has been extended from 39 weeks to the whole 50 weeks, which takes you to the actual date of March 14th. If you want further information on that, I know the OL has not put out their guidelines yet. They're working on that as we speak. I speculate, though, after the first of the year, you'll definitely have more guidance on that specifically. But we do know right now, under the bill, that you have until March 14th that you are now eligible for that assistance under the PUA.
Great. Thank you, Joe. Let's see the next slide here. Michelle, this would be some PPP questions for you. Are businesses that already applied for PPP in the first round, would they be qualified to receive it again?
Yes, businesses can apply for a second PPP. You have to qualify by demonstrating that 25% reduction in revenue.
And that 25%, another similar question, do you need to show that loss in all the quarters of 2020 as compared to 2019?
No, it really depends on your business circumstance. If we go to slide 7, Lisa. Yep, there we go. So it really depends on when your business was operating, if you were operating for the whole of 2019 or for only certain quarters of 2019. That's when you would have to demonstrate the loss.
But at the end of the day, you just need to show it for one quarter.
Yes.
Can I add something in here, Matt?
Please. Yeah.
So this is called the second draw. So Michelle is absolutely correct. Folks can apply for a new PPP loan once everything is up and running. And I think the only maybe talking point we might want to hit, in case there are some folks on the call that are in the accommodation or food services industry, and that is that the second draw loan for those specific codes would be 3.5 times the average monthly payroll costs. So everyone else is 2.5 times, but if you're in food or accommodations, for this second draw, it would be 3.5 times your monthly payroll costs.
Great. Thank you for pointing that out, Catherine. Catherine, I just want to go through these questions, but I know that it puts you in the position of saying we don't have the answer completely, but if somebody has not applied for forgiveness yet for their first round PPP, is there a difference in what the forgiveness application process is going to be like?
Okay, that's actually a fantastic question, because again, what I'm basing my knowledge on right now is the current bill as it was signed. So without, being a broken record, we'll be waiting for the implementation. However, for PPP loans of $150,000, they will now qualify for the simplified form. So as it currently sits, as today, as our guidance is, the simplified form is for loans up to $50,000. The bill, as it was signed, that moves up to $150,000 for the simplified form. But again, anything I say needs to be clarified that we're waiting for guidance. So the answer is yes. There will be new guidance on PPP forgiveness.
Great. And on the PPP, if a business had previously applied for PPP, can they submit the same 2019 payroll information as the previous application? I think that is a wait and see. We need to see what the new application looks like. And that's probably the best way to leave that at the moment. Another question.
Sebastian, on that though, and this is what I know a lot of small businesses, especially minority businesses, I would encourage those who apply for a PPP and you use 2019. Remember, the qualifier under the new bill is you're showing a loss of revenue of a certain percentage. And so I would not only look at your 2019, I would look at preparing your 2020 document as well to show that from 2019 and 2020, the loss. It's going to be very, very important, especially when it comes down to the forgiveness portion or actually receiving the money, whether you're applying for the EIDL or the new PPP. We really need to look at, one, gathering your taxes. So encourage all the small business to, one, gather the taxes. Number two, look at their payroll. What did they submit to the federal government? Well, we're using 219. And then thirdly, looking at since February 29th of 2020, what have been the losses of revenue to be greater than 30%? Because you have to prove under this bill that there has been a significant amount of loss. All right. We talk about theaters and other things of nature. They have to even show a greater percentage of loss to actually qualify. And there's some time parameters within that. So what I would encourage everyone as partners to reach out to their constituency and to start to prep them with proper documentations. Most small business or minority businesses that missed out on the first run, they weren't prepared for the documentation. So in looking at the first PPP and looking at the first advance, we know the qualifiers for under the CARES Act. There is some similarities in the bill, under the new bill, so some of the same requirements. I think the caveat, though, is you have to prove, though, the loss of revenue, which is the significant burden of proof. And I think that will be confusion for some of them because a lot of people don't do their taxes to the end of the year. That's why a lot of them missed the dates going back to April and May. They had not yet done their taxes. Some of them I know, some of my clients, they've just completed their extension is 2 months ago. So we should really look at that and encourage them to go and talk to their accountants or bookkeepers to make sure they're looking at the top of possible qualifiers for what's in the bill. And as next week or so, in the next 9 days or so, we will definitely have further guidance from SBA, and we'll be able to send correspondence out to you. But at least they can go back under what they're looking at the provisions of the CARES Act and what they needed to do from a financial standpoint, which most small businesses missed out on because they were not prepared. It's just the way they do business, unfortunately. So we need to really encourage them to go and say, hey, this is an opportune time to contact one of the partners to help with the financial documentation and gathering the actual documents. It's a checklist, if you will. If you have any questions, you can go to SBA's website. There's guidance there from the CARES Act. You can go to our website. And I do believe in the new bill, some of that still will be as a qualifier. But one caveat to that will be the reduction of revenue. And so we definitely want to keep that in mind.
Thank you very much, Joe. Lisa, we could go to slide 4. Michelle, I'll direct this to you. They want to revisit the tax pieces with the PPP loan. Their loan was forgiven. Does this mean that we will not be taxed on PPP?
You will not be taxed on the forgiven PPP loan, no.
Great. And now the deductions are now allowable. There's no exclusion of the deductions either.
Correct.
Great. And that's same with the EIDL advance, the grant portion. There's no exclusion of the deductions there either.
Correct.
Great.
And Matt, I think it's important here. That was a big, there's a lot of confusion on that up until I believe September when the Treasury came out with guidance. So as we all continue to say, SBA needs to come out with guidance. I think, businesses should make sure that they're talking with their accountants to look for guidance from Treasury regarding how best to account for that.
Because, Catherine, this is also changed not just for this latest round of EIDL advances and PPP, it's also retroactive for the first round.
Right, exactly. So I think this is there's not one point here in your presentation that's not important, but I think because this is retroactive, it was something that people were unhappy with, how they were going to account for their loan forgiveness. So I think this definitely has a large impact on businesses filing their 2020 tax returns. But again, until, this is where we're waiting for Treasury, to come out with their guidance and implementation. I have no issues with what's written, but I think I'm just highlighting that I think this is a very important factor for the 65,000 Connecticut businesses received PPP loans. So I think this is very significant.
Yes, agreed. Thank you. For the EIDL is going to be accessible again, but Catherine, there is just EIDL Advanced. There is not any EIDL loan, correct?
The EIDL loan is currently still open till the end of December. But I believe in the new fund that there's a set aside. I'm trying to look for the answer right now. Joe, is that what you believe as well? That there's a specific set aside?
Yeah, there's a specific set aside. I believe it's $15 billion for minority small business and low income. The key word in the legislation is low income communities. And so that in the state of Connecticut, that would probably qualify minimally 18 of our urban centers, which fall under the definition of the federal census of low income communities. So just keep that in mind. I think what we should all do, though, is that minimally the portion that most small businesses or minorities who look at, what kind of money that I don't have to pay back. So it would be the EIDL advance that they're going to be looking at. Because remember, in the CARES Act, the advance was kind of a consideration of a loan, if you will. If you didn't receive the loan, you automatically receive a certain amount up to $10,000, and then under the guidance, it was changed and it was given out later on in the spring by the number of employees. But that is not in the bill as it was in the CARES Act. So that's one of the differences. And so if you receive, say, $2,000 or $3,000, you're now eligible to get the full amount to really make businesses whole, because a large majority to receive $10,000 in grant money is probably a greater help to a small business in our country than giving them a $25,000 loan. When in fact that we're suffering and they're just trying to keep their doors open, so to burden the American public and the small business with another debt, this is what the bill didn't want to do. And what the bill is trying to do is to kind of right a wrong, or to include those businesses that were left out through the CARES Act. And that's what this whole legislation of the bill is talking about when it talks about that you can receive up to the $10,000. You can apply if you received it in the past or you receive a partial payment to the bill now allows you to receive that. But know that there's a portion of the bill, that is actually set aside specifically for low-income communities and those small businesses in the low-income communities, which is very different and what the Congress really fought for to include us in.
Great. Thank you, Joe. Okay. A couple of PPP banking questions. My banker still hasn't issued documentation for forgiveness of the PPP loan. Is this unusual, and should I be concerned?
Michelle, you want to take it first, and then I'll follow up?
Sure, I'll take that. So we were aware that legislation was pending for several months, and so many banks did not begin the PPP forgiveness process because they didn't want to go through the administrative process of creating portals, et cetera, only to have the forgiveness process change. So I would not be concerned. You have up until 10 months after the end of your covered period to apply for PPP forgiveness.
And so again, I would say there's no reason to be concerned. The current forgiveness applications, while you would go to the bank, they are available on SBA.gov, so you can go see them. And Matt, you might even have something on your website, so you can go to see what information would be required of you once your bank opens up that portal. So again, and I think Joe continues to say this, getting your documents in order. That's something we all can be doing now, prior waiting for guidance. But anyone should be able to go see the information that they need, and that would be on the SBA.gov's website. You'd actually see the application forms while you're waiting for your bank to still open up their portal. And with this new legislation, there will be, as I mentioned, there will be changes in forgiveness, specifically the simplification of PPP loans of $150,000 or less.
Great, thank you. Another question is, for the second round of PPP, do you need to work with the same institution that you worked with the first time? If they experienced frustration during that application process, can they try somebody else?
That's an excellent question. Again, my suggestion is, wait for guidance, but logically, I can't see why you wouldn't be able to try someone new. You just would have to make sure that you're not double counting your numbers. Michelle, you want to give an opinion here?
There has not been guidance as to whether or not you have to use the same bank, but if you had a poor experience with one bank, we would certainly encourage you to go to another bank if that's permitted.
And the other thing here is I'd also bring up, there's again, we all have to wait for the guidance, and maybe Joe can talk to this, but they are really making an effort to go into community banks. So that would suggest that, there's different avenues. Agree, Joe?
I would definitely agree. I would think that some of our relationships in our community, that we look at, even our micro lenders and our community banks. I know there was some correspondence just the other day that some of these banks that want to and encourage to want new applicants. I know in the previous, the CARES Act, certain small businesses were ineligible because they didn't have a banking relationship, unfortunately. And so some of the community banks and the banks in Connecticut have heard that and have sent out correspondence, which we can send a flyer. I think I know of two banks specifically that are doing exactly that. They're being proactive, knowing that the bill is online, and that they know that as long as you become maybe, I think, a client, meaning opening an account with them, they will process your PPP. And so I think that more of that will be coming and be forthcoming. So just once again, be aware of that, ask questions, ask your partners, encourage people to go to the different websites, and to get the help that they need. Don't wait till the last minute. And that's what's unfortunate, that on the first go around, too many of us just sat idly by, or we did not know. We really need to get the word out that there are resources out there, and each partner on the phone is a good first start. And then we know that we do have a checklist of things that we should be doing and we could be doing as we wait for Treasury and the SBA guidelines to actually come out. So I would just encourage anyone who calls you, asking for questions, simply share the information that we shared today. I know this webinar is being recorded. Have them go to that. I think a lot of their questions may be answered. So in the interim, for the remaining of this week into the new year, at least they can get their financial documents. At least they can have a conversation to their accountant or to their bookkeeper as it relates to if they've already have a PPP, how is it going to translate if they go into a new PPP situation? What is really the bill is saying up until with the information that we have, how will it affect their business? And so I truly look at we're being advisors, if you will, giving them good information. Something that information is power, and I think the more information we can give to our small businesses, especially in the communities of the underserved, the better served they will be.
Great, thank you. Catherine, a question for you. Are women-owned businesses considered to be minority-owned for the purposes of these programs?
I'm thinking. I don't want to answer any question incorrectly. In my opinion, I will get back to you.
Yeah, it's a really good question. So thank you for.
And I don't want to give anyone a wrong answer. So if that person can give you the information in the chat, Matt, and we can get them the correct business.
Yeah, we can follow up with him.
Because I think there are many definitions in this current bill that have to be identified. So I think there's a lot to still come.
Great. Just making a note of that name, and we'll follow up with that person offline. And so EIDL, just to be clear here, they're asking if it needs to be repaid, and the grant portion is still a grant, but the loan, nothing has changed. There's been no automatic forgiveness to the loan. That still needs to be repaid, correct?
I don't see anything in any of the early information that I have for that to be correct.
Great. And I know we're approaching the end of the time here. Lots of similar questions, and just trying to see. Oh, if we had Michelle, this is on the 25% on the PPP. If they had a loss in the second quarter but got PPP, would that PPP then be counted as revenue as they're calculating their loss? Michelle?
I don't believe so. I think PPP is excluded from the revenue. Joe or Catherine, can you confirm that?
The PPP forgiveness is excluded from your gross revenue or considered income. So you're not going to be taxed on that. That's coming from directly from Treasury on part of this new bill. So hopefully that answers the question.
Is this in regards to applying for a second PPP loan if they've gotten the first round of PPP?
Yes.
It's my understanding it's a non-taxable event, the way the bill is written. But once again, just wait for Treasury. No one has to apply their taxes before January 15th, really until April. And like I encourage everyone through CARES Act, please wait on Treasury. Please wait on Treasury. I can't encourage you enough to please wait on Treasury and let Treasury put out the guidelines for the 2020 that you need to apply for your taxes for 2021. And then you will know that exactly. So let's not guess on that one. It's very important.
Right. The patience that, you're urging, Joe, is just, we can't stress it enough. I mean, we all went through this experience together in the spring and saw that there were lots of clarifications that happened in weeks and months following the initial application for PPP. So let's just let everybody get things straightened out so we can make this as painless as possible for everybody as we try to move forward. Here is an application kind of standard question. In their last attempt to apply for PPP during the first round, it said in print that felons were ineligible if convicted in the last 3 years or still on probation. Will that apply in this second round as well?
I do not know. Again, I'm using these questions. I'm making a list. So I'm using this as a learning experience for myself as to some of these nuanced questions. I do not know where that is in this bill.
Great. Thank you very much, Catherine, for that. And thank you, everybody, for asking these good questions. Just in terms of some of how the sausage gets made, I know that during the spring, when we got questions like this from clients, we took them right back to our SBA district office, and they were part of communicating that information back to Washington, trying to get some of the clarification that we all needed. So thank you very much.
And Matt, before we end, could I just make a plug for something?
Yeah, please do, Catherine.
I was excited to join this webinar today because, we are trying to reach a very specific community. Many believe that the minority-owned businesses did not participate as significantly as they could have in the first round. So I'm thrilled to join this. But if there's anyone on this call today that thinks they have an organization that we should reach out to, please pick up the phone, pick up an email, reach out to us, our friends at SBDC and our other resource partners. We all have a desire to make sure that the information gets out there, and we will work very hard as soon as information, happens to get out there. But we don't know what we don't know. So if there's an organization that's out there that doesn't feel that they have a good connection with the SBA, now is the time to make that connection while we wait for implementation.
That's a really great point, Catherine. Thank you very much. And I think it's a great way to bring ourselves to close. I really want to thank everybody for joining us today. And we will be working with all of our partners to make sure that as we get answers to these questions, when we have the program parameters and the specifics and the applications, that we have another webinar that goes through that in greater detail and can help provide more clarity. So I'd like to, again, to thank all of our partners, the SBA, Catherine Marks for joining us, Deborah Cavanis, President and CEO of Greater Bridgeport Opportunities Industrialization Center, Kim Hawkins from HEDCO, Anne-Marie Knight from the Black Business Alliance, and Diana Washington, the Vice President of the Southern Connecticut Black Chamber of Commerce. Thank you all for joining us today, and we look forward to seeing you again soon. Happy New Year.
See you guys.
Thank you.